Welcome to Capital Link's company presentation series.
Nicholas Bornos of Capital Link, and I would like to welcome you again to Capital Link's corporate presentation series. We are delighted to have with us the top management of Navigator Gas, who are going to talk about their development, corporate strategy, and sector outlook. As a reminder, this presentation is not an offer to buy or sell securities. It is not an investment advice or advice of any kind, and it is intended purely for informational purposes. Logistically, we will have a presentation, and then after the end of the slide presentation, we will have Q&A, live Q&A. Please submit your questions through the Q&A button at the bottom of the screen, and your questions will be answered by management after the slide presentation. And this presentation will remain archived it can be accessed upon demand later on. And with this in mind, I will turn the floor over to Randy Giveans, Executive Vice President of Investor Relations and Business Development, who will introduce the other speakers and manage the session. Randy and Oeyvind and Matt, thank you for being with us.
Awesome. Thanks so much for that introduction, Nicholas, and thank you, Capital Link, for hosting us on today's webinar. So with that, we have some slides prepared, and today's speaker, we will start with our Chief Executive Officer, Mads Peter Zacho, followed up by Oeyvind Lindeman, on the Chief Commercial Officer, giving the commercial update, and then myself, I'll come back on to give some updates around financials and some recent developments. So with that, if we can go a few slides forward, I'll turn it over to Mads for some company background and information.
Good. Yes. Good morning and good afternoon, and thanks for joining our session here. I'll just run over a couple of pages here, giving a little bit of an introduction to Navigator, particularly for those that are new to the company. I'll keep up a relatively brisk pace so that Oeyvind later on can maybe dwell a little bit more on all the commercial update and what we see in the market. And then after that, Randy will talk a little bit about all the things that we've been doing, some of the projects that we have ongoing or just completed. But with this page here, you can see a little bit of a historical overview of Navigator. And Navigator was founded as a handysize gas carrier, and you can see from the current business composition that we have that we've stayed loyal to this segment. It is the main part of our business. We have grown the business of Navigator through acquisitions over time to a point where we today will be owning 57 vessels by the probably the middle of this year, once we have taken over the 5 Greater Bay vessels in our joint venture, as we note here. We have fortified the position in ethylene that Navigator has held through the enterprise joint venture, where we've invested into terminal assets as well to complement our shipping business. And we've already seen now a lot of evidence that this brings substantial synergies to our business, and also means that we have appetite for more of that to come in the future. So this was a quick overview, and maybe jump to the next page. And one back. Yeah, so this is an overview of the commodities that Navigator carries. You can look to the left and see the LPG has been historically the biggest proportion of our business. It's basically propane and butane that you know so well from your gas barbecue at home. It's a versatile energy carrier, and it's also an important chemical building block. It's grown in prominence, you could say, during the recent energy crisis in Europe, and is an important energy source for Europe over the winter as well. We're also transporting right now a bunch of petchems, and here particularly we include ethylene. It's an important building block for plastics production across the world. We also have ammonia. It's used in the production of fertilizer. It's key in the food production process and also for food security, and also one where we've seen changing trading patterns as a result of the ongoing war between or in Ukraine. Going forward, ammonia will become likely a bigger part of our business. We see blue and green ammonia, that is ammonia that's produced without any greenhouse gas emissions and combusted without any greenhouse gas emissions. It'll be important energy carriers going forward, and we think it's going to be a large and growing business area for Navigator. And so is the CO2. We see that there are many projects under development. We don't carry CO2 in Navigator today, but it's an emerging new business area. And you can see when we look at this, we have three very strong footholds in LPG, in ammonia, in petchems right now, and we see some very interesting new growth areas in the green transition coming with blue-green ammonia and the CO2 as well. So if you jump to the next one. So this is just an illustration, you could say, of the global nature of Navigator's business. Right in the middle of the map, you can see Houston. It's our home port, and that's where the majority of our business originates. Petchems and ethylene travels very long distance. It travels, for instance, from shipped out of Houston and to China. So it goes across the Pacific and long haul business. And you can see that also in the green bars below, that compared to cargo volume, earnings days is a disproportionate large part for the petchems transportation. Vice versa with ammonia and LPG. These are typically regional businesses for our handies. Ammonia has gone somewhat longer distances in the past year because of the war in Ukraine, but typically LPG and ammonia is a regional trade for us. If you hop on to the next one, this is really an illustration of why we like our semi-ref handies so much. Our vessels can carry both cooled and also pressurized gases, as opposed to what you see in the VLGCs, or the pressurized vessels, and also, also in the fully ref vessels, the VLGCs. And so here, good versatile vessels that we are having that can be used for pretty much all the gases that are being transported, except from LNG. Hopping on to the next, to the page 8 here, you can see it's one of the great pictures that we have taken at the Targa terminal in Houston. This is where you can see 3 Navigator vessels that are loading and discharging propane, butadiene, and ethylene. It also shows why we like our joint venture terminal at Morgan's Point so much, because here, where this picture is taken at Targa, it takes about 12 days to load an ethylene carrier at a rate of 30 tons per hour. At Morgan's Point, our joint venture terminal, it takes less than a day because we can load there at 1,000 tons per hour. So it is really the vast majority of all the ethylene that's being transported out of the Houston areas is done from the Morgan's Point terminal. So with that, I think I'll just hand it over to you, Oeyvind, so you can talk a little bit about the commercial opportunities we're seeing.
Thank you, Mats. Really, just to follow on from one of the previous pages, whereby Houston is our home port. So North America is the locomotive for a lot of the opportunities we are seeing, and also pushing more and more exports out of North America, be it LPG, be it ethane, be it ethylene, or more propylene and other petrochemical cargoes as we go forward over the next few years. So one key metric to look at to assess the health of the North American market, and hence also as in association with Navigator Gas, is the NGL production. So this graph on the bottom left is taken from EIA, and they monitor all the LPG exports and the NGL production. The recent numbers are up, and the collective industry also believes that the NGL production is increasing. That is extremely good because US domestic demand for these products are relatively flat. Therefore, a lot of midstream companies are talking about expanding production, but also export capacity to be able to export these molecules. Propane is an attractive molecule because of its versatility as an energy carrier against oil. So there's a lot of folks today that are switching from high-priced oil to propane LPG, which is attractive for our business and is pushing demand, which is good. In terms of North America, LPG exports predominantly are on bigger ships. However, there is an increasing trend that handysize LPG exports from the US also increasing at a moderate rate, but positive for the handysize segment. So keep an eye on North America. It's very important. There's a lot of positive development activities in North America that will support our own efforts and ambitions at Navigator Gas. Next slide. In terms of, on the back of NGL production, one key element of the natural gas liquid is ethane. Ethane is the fundamental building block for the production of ethylene, which is in turn fundamental building block for consumer goods and so forth. So if ethane is cheap, which it is, it's on the bottom left graph, is the green line there. Ethane remains fundamentally competitive against any other feedstock or any other location in the world, which gives North American chemical industry a huge price advantage. Therefore, they can produce ethylene cheaply compared to other parts of the world, and therefore the export terminal at Morgan's Point functions as a release valve, an opportunity for domestic US producers to sell their products, and also for international buyers to buy and access competitively priced ethylene from the US. The arbitrage is there. What is interesting for us, for Navigator, putting our freight hat on, is where the product is going. So if US ethylene from our terminal goes to Europe, it takes 30 days round voyage, and we discharge in Europe and come back. But if it goes trans-Pacific to Asia, then it takes double, 60 days to go there and back. That has a big impact on the supply of ships and availability of ships. So we are monitoring not only volume going out of North America and from our terminal, it's at nameplate capacity at the moment, but also where the cargoes are going. And you can see in the middle graph, if you follow the dark blackish line, is the percentage of the US ethylene export going to Asia. So it's about 75% at the moment, which is great. That tightens the market, and later on you can see how that has impacted the quoted freight rates. US ethane export as a feedstock also increasing, just underpinning our fundamental belief that NGL production is increasing, the world needs it, and therefore it is exported on ships. Next slide. One development that Mats mentioned briefly is that of ammonia. So because of high natural gas prices in particularly Europe, and also lack of supply from Russian ammonia through Ukraine, Europeans have been scrambling to satisfy their own demand for ammonia. Ammonia is a key element, input for production of fertilizer, ultimately food production. Traditionally, Europe has been relatively self-sufficient, but now they have to look elsewhere. And on the graph on the right-hand side, you can see where up until February last year, the ammonia imports to Europe were quite stable, and the location they got it from. However, now Europeans are importing ammonia products from anywhere they can get their hands on it, meaning increased distances. So at the beginning of last year, we had 3 ships out of our 50 plus vessels in ammonia. Today we have 10 ships trading ammonia. And that is a big impact in a relatively small segment, because if you suddenly have 7 additional Navigator ships trading ammonia, they are not available in the LPG market or the petrochemical market. So it tightens the overall segment. And we believe that this is going to continue, perhaps not as strong, but it's not going to go back to the only 3 ships that we had 12 months ago. Next slide, please. So all this combined, you can see that our earnings days mix for the entire fleet is composed on the graph to the right. You can see that the dark blue at the bottom there, ammonia TC, the earnings days in ammonia is going up because we have more ships in that. And that is pushing up a strong petrochemical market, a lot of ethylene from healthy ethylene volumes from the terminal heading to Asia, not Europe, is pushing up utilization. And that is an important factor in the supply-demand balance of ships in the handysize segment. We've guided 4Q to be above 90%, and the strength has continued throughout the last couple of months, which is good. Next slide, please. So then I briefly mentioned the impact of healthy ethylene volumes heading to Asia and not to Europe, as we saw during last summer. You can see the green line is the quoted market rates for ethylene vessels. You can see that that has increased over the last quarter or so. But likewise, also on the dark blue and the medium blue line, which is handysize semi-refrigerated and handysize fully refrigerated, they have also increased. And that is because there's been healthy demand for LPG to Europe, particularly now during wintertime. More ships in ammonia, so less vessels available in the other markets, strong ethylene. So the ethylene vessels are trading ethylene and not any other cargo. So it's a good, I wouldn't say a perfect storm, but it's a very healthy storm in the handysize market, and the supply of ships or the availability of ships is tighter, and that improves utilization and following rates. Next slide, please. Another important factor to consider with Navigator going forward is that of supply of ships, and that is, of course, new building programs. The handysize segment, and the one with the green line around circled, that is a very low order book. So we have a clear visibility of the supply of vessels over the next 3 years. And I think it's probably one of the very, very few vessel segments in any shipping maritime sector with such a low order book. So that is helpful when we think about how the future will develop, which is obviously a positive element into the formula of how would handysize rates and the segment look going forward for the next 3 years. So that was just a snapshot, as a positive snapshot of where we're at today. And I will leave that the rest of the other opportunity set and some of the projects that we have been doing to Randy. Randy?
Awesome. Thanks for that, Oeyvind. So yeah, we're going to fly through some of these financial pages and focus more on the recent developments. But first, just looking at the third quarter here, I won't spend too much time on this. It was certainly the softest quarter of 2022, and it usually is the softest quarter of the year. Just 2 focus points here, as you can see in the bottom right table. The utilization was under 85%. As Oeyvind just mentioned, we already guided and reiterating that guidance of above 90% for the fourth quarter of 2022. And then right below that, the average TCE was 22,000 for the third quarter. And on the rate charts that Oeyvind was just walking through, those rates have been going up since then. So fourth quarter, will be better than the third quarter, and we've already said that publicly. So next slide on the balance sheet. The balance sheet is certainly strong, and it provides us a lot of financial flexibility. I'll go into a few things on the next slide, but on this one, you'll see our total liquidity there of $177 million. Total cash and cash equivalents was $157 million. This is as of September 30th. Things have obviously gotten better since then. Our net debt to EBITDA was about 3.4 times as of September 30th, and that is using the last 12 months of EBITDA. So the next slide will give some updates on the balance sheet going forward. We recently entered into a new secured term loan to refinance a maturing credit facility, and that increased liquidity by $78 million. And that is that new maturity that was pushed by 6 years to 2028. That's the $37 million bullet that is due at the end of 2028. You can see that on the bottom right of your slide. We also fully repaid all outstanding bonds under the original 600 million NOK bond, senior secured bonds, that was also in late December of 2022. So we took that out early. That matured in November of 23, but we decided to repay that early. It was our most expensive debt, and again, we have very strong liquidity. So for the time being, the focus is on those two blue boxes in 2023, those maturities for about $130 million. The plan is to refinance that with an upsized credit facility, pushing those maturities out at least 5 or 6 years to the right. So in the next few months, you'll see a very clean balance sheet with no maturities due until 2025. And in the meantime, we will continue to reduce leverage through that aggressive debt amort that you see on the left-hand side there, a little over $121 million to be repaid this year and another $125 million next year. So on the next slide, just wanted to touch on a little bit of our operations and the low cash break-evens. You'll see there that for the full year 22, the estimated cash break-even was around 18,500 a day. Well below our TCE rates that we've been earning really throughout the cycle. So very low cash break-evens. That's going to go up a little bit for 23 just because of the debt amort is going to increase. But other than that, should remain relatively stable. Our expense guidance for 22 remains intact, and we will give updated guidance for 2023 coming in March. So on the next slide, wanted to just point out some of these kind of substantial EBITDA upside that we have, right? After 3 quarters in a row of 55 million, 4Q 21, first quarter and second quarter of 22, there was a little seasonal pullback in the third quarter, plus some timing irregularities that were pushed into the fourth quarter. So again, we expect that fourth quarter number to get back to at least those $55 million levels that we saw in the previous 3 quarters before the third quarter. And then going forward, there is significant potential annual EBITDA generation with increases in spot rates. And that's what we've been seeing, frankly, especially now that utilization is at or above 90%. And you can see that chart with the sensitivity there on the right. So with that, I want to go forward to a few of the recent developments. If you go forward 2 more slides here. So we acquired or announced the acquisition of 5 vessels through a new joint venture with Greater Bay Gas. We just took delivery of the first vessel, the Pacific Jupiter, and renamed it the Navigator Luna in December. The plan is to take 2 more deliveries this month, and then another one in the middle of this year, and the 5th and final one by November of 2023. Just putting that into context, the total purchase price for the 5 vessels, $233 million. 60% of that is our portion, so about 140. So when you factor in the debt financing against it, we'll be paying about $10 million per vessel, or $50 million overall. On the next slide, speaking of $50 million, we recently announced a $50 million share buyback program. And obviously there's many reasons for that, as you'll see there in the second bullet. Not the least of which being our share price is far disconnected from our internal NAV calculations, and our balance sheet is very strong. So the last item that prohibited us from share buybacks was the NOC bonds being outstanding. But as I said before, we have since called those NOC bonds. So now we are allowed to implement the share buyback program. And then on the next slide, last slide for me, is the ethylene export terminal. We announced the expansion of that back in November. Construction is set to start, at least the long lead items being ordered this month or February at the latest. With that, we plan on completing this expansion in 2024, and that is our 50-50 joint venture with Enterprise Products Partners. As you can see there, the chart on the left, September was a weaker month, but clearly we recouped a lot of that, as I mentioned, some of the timing there in October. Very strong month there. November, December were pretty firm as well. So we'll have full information on this expansion, including CapEx guidelines or some ranges there, as well as the volume addition of the expansion, likely in a joint press release with Enterprise at some point in the coming weeks. So certainly stay tuned for that. Very exciting development we have here. So with that, I'll turn it back over to Maz, so for some closing remarks, and then I'll come back on for some Q&A.
Good. Yeah, thanks a lot. Just to round this off, I'm not going to talk so much about Q3, but if we do take a look at this outlook, just to confirm one more time that with the October utilization and our feelings for about how November and December comes out, we're pretty confident in that above 90% utilization guidance that we put out when we reported early on. We do also feel pretty comfortable about the export volumes that had run through the marine export terminal in Houston, where we said 270,000 tons. So we feel pretty good about that. No surprises have come up in the meantime. With the and Oeyvind talked a little bit about that, the transport of ethylene going from out of Houston has switched from Europe early on in the year to Asia in Q4, and we've seen a doubling of that ton-mile demand going into Q4, and that has of course been really good for our utilization and for our earnings. We are going to announce a little bit more about, or we'll be talking more in coming weeks about the expansion of our terminal in Houston together with Enterprise, and with it's developing according to plan as well. So I think all in all, when you look at this, and if you followed us in the recent conference calls, that some of the things that we had been putting on the agenda, they have been playing out pretty much as expected. So robust end to the year and reasonably positive and constructive outlook for most of the commodities that we carry, and also for our growth as well. So good development opportunities and good core business that is developing as planned. So I think with that, we should maybe be heading on to the exciting stuff, which is all the questions that you have for us.
Awesome. Yeah, we have a bunch here chimed in, so I'll start going through some of those. First, with the opening or reopening of China now, are you seeing any changes in bookings, and what are your thoughts on China going forward?
So clearly, an opening of China is a good thing. They require and import all things petrochemicals, at least from Navigator's point of view. And that is what we have seen lately, whereby a lot, well, more, 75% of the ethylene from North America is heading across Pacific to China, to that region. And that is helpful. Mats mentioned the doubling ton-mile demand, which definitely is helpful in a small segment. So that is positive. And it doesn't look like reading the news that they're going to go back to where they were. So I think it's game on for China, and it's positive for our business.
Perfect. Next question here. How drastic is the price differential between LPG, ammonia, CO2 for booking a carrier? Or stated this way, is one product more profitable for Navigator than others?
I think the beauty of Navigator is that we access and trade in different markets: LPG, petrochemicals, ammonia, and to be continued CO2. So they have different drivers, they have different trades, and they have different contracted sort of industry standards. So LPG for handysize is a mix between spot and time charters, whereas in ammonia, it's more time charter based. CO2 is not here yet, but that will be, the initial phase will be very much project based. So there are specific projects requiring specific ships, and they will be constructed against long-term time charters. So it's not so much about price differential today. Our fleet, because it is flexible, it will go where it makes the most sense. If that is LPG, it will go into LPG. If that is ammonia, it will go into ammonia. So the flexibility has a role to play there. But CO2 is not a spot product as such. It will be long-term project-based. So I hope that answers the question.
And maybe we can just add on the CO2 carriers that they will be most likely different ships. CO2 is heavy, and once that market gets started, we'll probably see purpose-built CO2 carriers that will be a little bit heavier, a little bit sturdier. So they will most certainly be, to begin with, built against these long-term contracts. So not traded spot at the outset.
Okay. All right. In a perfect world, what could the best utilization rate be for Navigator? I understand the time at dock, loading, unloading. So maybe it can't be 100%. You're not always in perfect positioning. But what, in a perfect world, highest utilization? You were mentioning in October was 94.4%. November, December, above 90%. How good can it get?
Yeah, in our, how we view it, above 90% is good. Above 95%, very good. You cannot get to 100% because it practically doesn't work. So anything above 95% is, we are extremely pleased and happy with. So I don't, this marginal difference between whether it's 96% or 97%, I mean, that is extremely high. I can't remember what the highest is from that slide we had, but I think 97 has been the highest we've ever had. And that is pretty much all the 58 plus ships being employed. So that is extremely high.
Yeah. A couple questions on the supply side. Why is the order book for new builds in the handysize segment so low?
Yeah, maybe I can just add a few words to that. It's of course difficult to guess. I mean, there'll be different reasons amongst different owners. But if we look at the history, profitability in the gas tanker segment through the cycle for long periods of time have not been great. So I think there is a number of people who are sitting analyzing the history and saying, this is an area where a number of players have had difficulty generating a suitable return for a long period of time. Particularly, there have been times when financial players have entered into shipping, and also that happened in the gas tanker segment as well. And that hadn't worked out so well for them, mainly also because the gas tanker business is an industrial shipping segment where most of the owners own their own tonnage. You don't see that the chartering in and out is happening to the same extent as you will see maybe in dry bulk or tankers. So this is not a segment that's suitable for financial players that want to play the asset cycle. And I think some players have realized that the hard way, and that means that you don't see much interest from financial players at all. It is mainly from the existing industrial players, and we are, you could say, a conservative bunch. We would like to up the profitability of the existing business before we start venturing into new buildings now. So a little bit of, you could say, the structure of our business, and also because of the history, I think. But yeah.
Okay. And then sticking on the supply side, what impact will CII or EEXI have on Navigator as well as competitors' cargo carrying capacity until 2026?
Yeah, I think if you look at the industry overall, it will not have a huge impact, but it will add some requirement for slowing down part of the segment. I think we will see overall a reduction in the average speed. So that means that in itself will be adding to tightening the market and to increasing the utilization overall. When it comes to Navigator, we have a relatively modern fleet. It's not going to mean a whole lot to the way that we trade our businesses. It's a relatively small number of our vessels that are ranked either in one of the lower segments in the D and the E. So it won't have much of an impact for us right now. Over time, of course, if we did nothing over time, our vessels would be moving into the lower categories. But of course, we are working very intensively on energy efficiency and operating our ships more efficiently, also installing energy savings devices on board our ships so we can follow the curve down by improving our energy efficiency overall. So overall, I wouldn't expect that it'll have much of an impact on the average speed and the earnings potential of our fleet.
Okay. Last question on the supply side. It's kind of two questions getting to the same. Can you talk about the interplay between ship sizes? For example, if Suezmax tankers are expensive to VLCCs, shippers will load the VLCCs tankers when available. So can you discuss the cargo splitting or maybe poaching between VLGCs and handysizes? And following on that, what are your thoughts on the large order book for the larger size gas carriers and potential impact on the handysize sector?
So one thing to keep in mind that the VLGCs, the very large gas carriers, they carry one product, and that is LPG only. So there's very little interplay, poaching, cannibalism between the very large gas carriers and handysize. They are two widely different segments. So that is not the biggest direct sort of correlation. There's a somewhat correlation from the medium gas carrier segment and handysize, not in petrochemicals. So just keep that in mind. Handysize ships are still the predominantly largest petrochemical gas carriers. So there won't be any poaching, if that's the word, from the segment above the medium gas carriers. So, but there is an impact from the LPG side and ammonia side. So depending on the trade, whether the port can accept a larger ship or not, or the storage is adequate to take a medium gas carrier cargo or not. So there are some physical limitations that even if they wanted to cannibalize, they could, but there is some link there. However, the opportunity set that we are seeing in the ammonia expansion, so we touched upon blue ammonia, additional production, exports of ammonia, blue ammonia, and also LPG. So again, going back to US NGL productions and increasing exports, that will benefit and particularly the medium gas carrier business in terms of LPG and ammonia. So we are quite optimistic about additional supply covering new build order book. But keep in mind that the cannibalism is not a straight line, and there we have different products, different trade lanes. So that is something to keep in mind. So it's not a tit for tat exercise.
Sure. Okay, Mods, I'll turn this one to you. Is it your intent to use the entire $50 million share buyback authorization? And if so, in what time frame?
Yeah, we'll be reporting on the progress of our share buyback program when we do our quarterly earnings. So we won't be reporting, you could say, on the progress in the meantime. The only thing I can say is that we have initiated the program. I can say that we, if you look at what we reported as our cash position when we finished Q3 was $150 million, and what we've done in terms of refinancings and so on has only strengthened it in the meantime. So we don't have any restrictions, you could say, cash-wise or in terms of the leverage that we have that would put any constraint on what we can do. So we'll keep you updated on this one.
Okay, good answer. It's fine. Oeyvind, back to you. Difference between semi and fully refrigerated rates and the demand for that, and then also is there seasonality in terms of usage of ships? I know we mentioned that 3Q is usually the weakest, 4Q, 1Q is stronger. Add a little more color.
Yeah, the largest part of the fleet is the semi-refrigerated handysize vessels. So they are more flexible compared to fully refrigerated ships. So we have 6 handysize fully refrigerated ships. They trade 1 ship in fully refrigerated LPG and 5 in ammonia. Very efficient in ammonia. Our semi-refrigerated handysize vessels are more flexible, as I just mentioned, and they do a mix between LPG, petrochemicals, propylene and butadiene, and also lately a couple of them have been doing ammonia. So that is the price differential that is being quoted, and as you see on that graph, mirroring flexibility or slightly less flexibility. In terms of seasonality, there is seasonality in LPG that goes with the LPG needed for heating during winter. So there is some seasonality. Petrochemicals, not so much, depending a little bit. Ammonia is very steady because people need to eat, have food. So there's again, when you look at Navigator, the different products we do trade, they have very different dynamics. So it's just the mix between them all that makes it quite interesting for us.
Okay, I've been told we have 5 more minutes, so I'll go through these next questions pretty quickly. One is the savings from the recent repayment of the NOK bond. So that was our most expensive debt, a little over 8%, $70+ million. So you're looking at $6 million a year. That has gone away. Now we did refinance that with cheaper debt from another credit facility at SOFR plus 2.1%. So there will certainly be some savings from that. Oeyvind, quick question here. How often do the ships need to be worked on to keep them running efficiently? And would that take them out of service or affect the utilization rate?
Yeah, so all the ships need to go to dry dock. It's called dry dock, whereby you take them out of service for about 2 weeks, 2 to 3 weeks, every 5th year. So with a fleet of 50+ ships, then every year you're bound to have about 10 vessels in dry dock. So that is a planned event whereby you take the ships out of service, which are not part of the utilization formula, because it is planned and you have to do it. So, but between the dry dockings, then of course there are maintenance programs on a continuous basis on board the ships to try to prevent any unnecessary off-hire or out-of-service situations.
Awesome. Our last 3 questions. Mods, to you. Congrats again on the Greater Bay acquisition. Following that, is there any potential for fleet expansion or additional bolt-on deals? And is your market share an issue as it relates to further fleet expansion?
To take the last one first, no, it's not. Because typically when you look at the gas tanker industry as a whole, we are a relatively small player. There are lots of tons of capacity in the very large gas carrier space, and also a very large number of very small gas carriers. So when you look at the market that way, it would be highly unlikely that there would be any discussions around market share constraints and so on. I think maybe the constraint is a little bit more that we are we've stayed true to our market in the handy sizes. We like the handy sizes and we like to stay here. We also have some mid-size ships, but we haven't really looked above and below. And that means that there's not a whole lot of potential acquisition targets or secondhand ships that are being made out for sale. So we will have to talk to some of the existing players and see if there are any that would like to exit from the industry, and we'll be happy to talk to them. We try and do our best to keep that discussion warm, so that we can gradually absorb more secondhand vessels as we've done in the past. So that is really the main thrust for us. It's not so much going out making new building orders right now. First of all, because the yards are relatively full. They're building a lot of LNG and container ships. Secondly, if we were to put an order, it would be a relatively long delivery period. So it will take 2.5 years before we got the vessel. And thirdly, they're quite expensive right now. The yard prices are high. So we don't really see the business case right now for going out ordering for fleet renewal perspective. It would have to be something quite tailored, where there was a long-term contract that we could go out and build a vessel against. So we keep our eyes open. We hope that we'll be able to identify more secondhand vessels that we can attract, but it's not an easy one.
Okay, 2 minutes, last 2 questions. I'll take the first quick one. I'll turn it to you for the last one, Mods. Are there any more refinancing projects left? What about financing the joint venture expansion? So first, on the refinancings, as I mentioned earlier, we have 2 maturities in 23, one for 62 million, one for 70 million. So that 130 million we will combine into a larger facility here in the next few months. So stay tuned for that. And for the JV expansion, we can certainly pay for that with cash on hand and cash from operations. We are certainly looking at opportunities to finance that. It is obviously a great asset that we have. So that will be to be determined over the next 12, 15, 18 months during the expansion. Last question for you, Mods, finishing us off. Navigator is clearly committed to sustainability. It's even in the motto behind all of your heads: connecting the world today, creating a sustainable tomorrow. So in what ways will Navigator be a part of the energy transition?
Yeah, we have a bunch of opportunities here, and it is a very, very clear component of our strategy. And I think we're quite different from some of the other shipping segments, where it's not so clear how to decarbonize the business and participate in this transition. It is for us. We are, of course, in the very short term, working hard on optimizing our energy consumption, so that we bring down the oil that we're burning on our existing vessels. And there's definitely more work to be done here by operating our ships more efficiently, and also by installing energy efficiency devices that have a relatively short payback period when the oil price is high as it is right now. So here we can do a lot in itself, but I think the big and most interesting part is really the growth opportunities that we have in front of us. It's in the blue and green ammonia, where a lot of that will be needed for not only fuel for ships, but also co-firing of power plants in Asia, for instance. This market is emerging right now. It'll take a little bit longer to grow and develop the green ammonia, because it takes a lot of solar and wind capacity to be built up. But I think the blue part of it, where you use existing ammonia production facilities combined with carbon capture and storage capex, here you can ramp up that production relatively quickly. And I think we are going to see over the next 2, 3, 4 years that a number of big projects will be starting to deliver blue ammonia and will be there to transport it. This is potentially $1 million or millions of tons of ammonia to be transported, and that can have a very exciting effect for us. The other one is the CO2 transportation, where we see the projects and the tenders are coming out right now, and we are participating in those, so that we would want to be amongst the front runners in delivering CO2 transportation as a service. So here you can already see that there are 2 big new business areas that are developing that will combined with our existing business, both support our earnings, but also take our business mix into a greener direction and bringing down our overall emissions, so that we can fully decarbonize over time.
Awesome. Well said. Thanks. I know we're out of time. Sorry for going a few minutes over there, Nicholas. I think we got to all the questions. If not, feel free to reach out, randy.givens@navigatorgas.com. We'd love to stay in touch. Nicholas, thank you again.
Well, thank you to all of you, Matt, Oeyvind, and Randy. A great presentation. And as a closing, this presentation will be available for replay upon demand. It will be archived. So we are sure that more people are going to log in and listen to this great discussion. Thank you very much.
Thank you.
Thank you.
Thank you.